Hey everybody, and welcome to another video. I'm John VanDuzer, CPA and partner with James Moore & Company. I'm part of the real estate services team. I got with me today Robert McDaniel. He's the Gainesville-Market President for BBVA. So thank you, Robert, for coming on.
Hey, John, thanks for having us. We're real excited to be here today.
Yeah. I'm excited to hear what you have to say about the whole world of banking and real estate. This is our 4th video, so if you haven't caught our others, head on over to our YouTube channel and you can check those out. It's definitely worth your time. And with that, Robert, let's just go ahead and get started kind of with your perspective on things. So how have your bank's operations changed as a result of COVID?
Well, it's interesting. There's been so much has changed since COVID, and it's affected so many clients and prospects and just companies in the marketplace, and so we've all been affected in some way. But it's really interesting because over the last number of years, we've really been in the process to help our clients become more digitized, the system and processes improvements that make them more nimble, more resilient in times like this. And that also applied to what we do. In fact, I recall a few years ago we had a hurricane, and I wanted to make sure our commercial bankers were able to work whenever, wherever. And so we've always made sure that our teams could work remotely to a great extent, because you never know, what could happen that could temporarily have the need to work from home. So a lot of the tools and technology we've been deploying has really helped that. It made a big difference. So in some ways, our commercial team, we were able to migrate to work from home, and we're still working from home. And a lot of our support areas and back office have as well. So it's pretty extensive across the bank. Our retail team, led by Chuck Sprague locally, they've remained open. The banks are open. We're still using our drive-through. Our lobbies are kind of appointment only, and they're closed for the moment. And that's worked extremely well. But some of those digital tools that we were able to use, clients can open their accounts electronically. We've got a great app. They can take a picture of a check, make a deposit. All those tools, it's really a culmination of things over many years have made that so much easier. I think if it was 10, 15 years ago we were dealing with this, the impact would have been far more severe from an operational standpoint. And that's been helpful. But there are a lot of things different. Working from home, we're doing more video conferences than we've ever done before. We're trying to meet clients' needs in a different way, and it's interesting. There's some things we miss about being in the office every day, but we find ways to stay connected. But thankfully, we've got a lot of tools. But I appreciate what our retail team has done. They've been the front line. We've not missed a beat there. We've not missed a beat in our commercial team, really working with clients and prospects. So it's different, but we've adapted pretty well. So I'm really pleased with where we are today with that.
Yeah, that's really good to hear. And that's one of those questions I think I kick around. It's like, if I wanted to go open up a bank account, can I even do that? And what I'm hearing is, yes, it may just be an appointment instead of just being able to stroll on into the bank. And
Absolutely.
then with you, have you had to change how you're, working with your customers and new customers and everything? I know that as I would see you guys out networking and that sort of thing, obviously nobody's doing a lot of that right now. But have you had to make any changes around that?
That's interesting because those networking events we do miss. We miss seeing everybody. You just reconnect with people a lot, and so those collisions or happenstance meetings are much more limited now. And so we've got to be real intentional about reaching out to people and scheduling time to visit. It may be a phone call, it could be a video call, but you've got to be a lot more intentional about staying connected. And we always want to have scheduled meetings with our clients and make sure that we're meeting their needs, but really you just want to stay connected to people, and you've got to take extra steps to make that happen. It's not happening at the event that's after work that you see a lot of people at, and and we've got to adjust to that. So those things are really key, because we think a bank, what's important to have the great technology. It's really about connecting with people, and we're helping bring support and ideas. And that's we marry those two concepts, giving great technology so their routine transactions can be taken care of, but also we want to have a solid banker for them to, we can share ideas and try to bring solutions. So you got to have both, and so we have stepped up on our own side to just reach out and be connected.
Yeah, that's great.
It is different.
It is. I feel the same way, so I understand. Can you give us kind of a 50,000-foot view of the current lending environment?
Yeah, so it's interesting. Obviously, when COVID, the shutdown started, it affected everybody to some extent, and in some companies pretty severely, and some, and so it's interesting to see what people have done to adapt, and hopefully as things can, we will continue to have the economy grow back. But it's been rewarding to see some companies that we saw had a tremendous, drop off in their sales and income right off the bat. But then steadily, month by month, you saw a steady improvement. Some are even ahead of where they were before, believe it or not. So that's a testament not only to maybe the economy picking up a little bit, but the resilience and creativity of a lot of the companies in the market, and trying to find ways to solve needs. So from a lending standpoint, and we lend across segments. So we do obviously do commercial real estate, but we're lending in technology, government institutional space, healthcare. So we lend across the market, and involved with companies across the market. And we have a lot of specialty areas that work with us in those areas. So it's broadly affected everybody. Some areas obviously have impacted more. If you're looking, and this is more focused on commercial real estate, there's segments in that area too. If you're in the hospitality, hotel business, that's been pretty heavily impacted.
Yeah.
And to some extent, and then retail, you think about the challenges that happen there in certain clients, retailers that have filed bankruptcy or and even shut all their stores down. And I was reading an article last week, and it kind of hit home. My first job out of high school, or while I was in high school and college, I worked at a Sears, and the Sears store that I worked at, and it was a great experience for me. At the time, this has been a little while, so they provide a lot of training, a lot of tools. I mean, I was a high school kid and it was a part-time job, but they provided more resources. I really like what they did. It helped me, I think, for my whole career. And so it was a great start for me in a working environment. And anyway, that store was the last one to remain open in the state of Georgia, and it's closing. So obviously, but things have shifted. But we've adapted, and we've got new retailers that have come online, and certain stores have done extremely well during this time, and they've got to adapt and move forward. But it is something, retailing may be a little different going forward.
Yeah.
But we've seen go ahead.
I was going to say, so when we talk about real estate and commercial real estate and kind of the whole gambit, are there any asset classes that you're still actively looking to lend on? Like you're saying, yes, we do this deal all day long. Don't say owner occupied.
Right. So
that's what every banker says.
Every deal is specific, and so I think the ones we see, warehousing has done really well.
Mm-hmm.
Obviously, with the growth of online retailers, that space has done well. Office has done well, and to some extent, although the future office may change, but we've not ever had a lot of office space in the Gainesville market, but that is held up well. And then multifamily has done well, even though I know there's a lot of questions and issues of what's going to happen, particularly in Gainesville with students. But overall, I'm surprised how well things have held up thus far.
Yeah.
I think our clients have done well, and they've been creative, and they've worked through it. And I don't think that means there's not challenges ahead, but thus far they've done really well trying to work through that. So,
And that's been
I think certain asset classes were more open.
Yeah, that's been a recurring theme, I think, through our videos, is there's a lot of optimism, especially in real estate, and I think our news cycle sometimes will paint a very ugly picture, but there really is some good things and some upside to what's going on, right now, as far as it's not all just doom and gloom. Are there any
Right.
asset classes that you basically have paused lending on that maybe in January or February, that might have gotten traction, but today it probably is hard to do?
I think, I don't think we've had any hard and fast, we're not going to do this loan, we're not going to do that loan. But, generally I mentioned hotels have been a challenge, particularly maybe a construction loan related to those.
Mhm.
We really, those may be areas you'd want to pause a little bit. I know there's some opening now, they're going to do well, hopefully. But, but those would be more challenging.
Yeah, no, that makes sense. What additional restrictions or terms have you added to your agreements? Last week when Bo Beery and I talked about multifamily, he had mentioned maybe some additional escrows. And so just kind of curious from your end, what has changed about the loan agreements and the covenants?
I heard Bo mention, and thanks, John. I really appreciate having me on, and excited to be here. And I appreciate what James Moore has done and other CPAs, but James Moore has done really with these webinars during all this. It's really kept us all communicating and shared a lot of great value. And so I know Bo mentioned about maybe providing a year worth of escrow for reserves, and it's not extensive. I've seen some of that. Potentially, you might have more equity needed going in to help support a deal, just to make sure there's not, if there's a drop in rents, if there's any kind of fluctuation, that you're supported in that way, and it's better for the borrower and the client to go in a deal, have a better structure,
Mhm.
and if it's reasonable for both parties, it's going to be a whole lot better if there is a bump in the road in the future, that it's a performing asset, it's going to do well. That structure going in can make a big difference. So I know sometimes people say, well, I'd rather borrow as much money as I can on this asset. That may not be best for the bank or the client, and we try to work with them to come up with the best solution for the long term. So these are long-term relationships, and like you mentioned, making a loan for a project, you may be working together for years on that. And but I appreciate this venue, and I've learned a lot from hearing from others too. So thank you
Well, good.
for supporting this.
That's our goal. And I think I've heard that.
But put me behind Bo Beery and Nick Banks is pretty hard. So I appreciate it.
Yeah. And I've heard that a lot from bankers in the past. I think the nature of your business is, as much consultative as it is, providing a loan, and that you're helping customers understand and navigate, almost protecting them from themselves and not getting over leveraged and that sort of thing. So that's really helpful. Has underwriting criteria changed any in the last few months as a result of COVID?
Not significantly, and I think that they're good loans that work, fit what we're trying to do. They've been getting done. I mean, we've had pretty much good loan year early, and we've continued to look for new loans,
Mm-hmm.
and there's a goal to grow, and we still want to grow and find the right opportunities. So there's not any desire to say, hey, we're not looking for new opportunities. That's not the situation, and I think this is a very different challenge than an earlier economic crisis. So this is well, it's going to, again, we've got some challenges that we've dealt with and challenges ahead. It is a very different environment. When you went into this early this year, the economy was really looking strong in a lot of categories, and so it's going to take a while to get that back, and it's certainly been severe impacts. But our hope is that after a period when we deal with this, that we see that return.
Yeah, that's great. How is new loan origination in the past, May, June compared to last year?
Yeah, so I think there's been less maybe less demand for new loans. Part of it is we've had a lot of clients that, got PPP loans, and we can talk about that a little bit, where, they got these forgivable loans. And so that helped them tremendously get the financing, get the capital they needed to really, have some good cash to weather the storm. And we've seen cash balances with our clients really increase between different programs that have been available. And so that hopefully will help them weather the storm, greatly. And so I've seen that. But we would like to see more loan demand. And I think that's just, a lot of times clients are kind of waiting, seeing what happens too. So they're not really to buy a new property or make an acquisition. And so sometimes that's, it's demand driven as much as it is, supply from the bank.
And that's been a recurring theme too, where it, especially as we've talked to, I've talked to basically 3 real estate brokers in a row now, and there was a pause for, a period of time on any new deals. And now as time's going on, it's picking up. So I would expect, as you're kind of a little bit further in the process, it will pick up for you kind of similar as to them.
Right.
To shift gears a little bit on residential mortgages, is there any significant changes to residential lending as a result of COVID?
Yeah. Well, residential lending has really been a big bright spot. I know that our volume is up tremendously in that area, and that's both from a portfolio loan products as well, our secondary products as well as our portfolio products. Our portfolio products maybe tend to be a lot of jumbo. So we've been lending kind of across the segment, and we know how important residential mortgage is. It's a key moment in somebody's life to buy a house, and we want to make that transaction as strong and smooth as possible. And there is some hopefully temporary additional documentation, but it's really not that significant that we're looking for in order to provide those loans. But it's a very busy time in residential mortgage. We're doing a really good job there. I think I saw that Freddie Mac announced this week that the average 30-year fixed rate average was like 298, which is a new record.
Wow.
So that's certainly fueling volume of refinances. But I was looking back at 2008 when we had the Great Recession, and gosh, rates were 6.5% or give or take before that hit. So we're in a very different space than we were at that point. So a lot of people are taking advantage of that, and so I think it's been modest changes, but it's doing really well. The main thing is it's driven by great rates right
now. Yeah. In April, I read that banks had started pausing on new jumbo loans. Can you kind of speak to that and what the status is today?
Yeah, we've not paused. I've heard some certain banks had paused, but we have not paused on jumbo loans, and that's we're pretty active in that market space. They have been for a long time, so that's not the case with us. I've also heard other banks paused on home equity lines that were related, and we've not paused there either.
Well, that's good to hear. So that's good. That's good information. Shifting gears a little bit to kind of your current loan portfolio, how is the bank looking at it from a risk perspective?
Sure. So, we had, we've been working with some clients, but it's really been, we were, proactive and saying, hey, there's some opportunities if you need some help on some payments. But it was a very small percentage. So I would say the portfolio at this point has held up extremely well, and clients are wanting to find ways to make payments and grow and take care of their responsibilities, and they've been creative in how they go about their business. So it's really, at this point, worked really well. And there could be challenges ahead, and I understand that, but it's not. It's been. You think at this point, I was maybe going into this thought it might have been worse than we are at this point, and so I'm real thankful for that. Hopefully that can continue. And it's something we're talking to clients. We're having a lot more conversations with clients, and we're all trying to be on the same page, and that really helps.
Well, good. I know in the March, April timeframe, a very common thing was for customers to ask for a forbearance period. And I think a lot of financial institutions were willing to grant, 90 days pretty liberally. Can you kind of speak to kind of what happened for you in that time period and kind of what that looked like?
Well, certain things were like if you had an SBA loan, there was a automatic 90-day stay of payment. And I don't know if it's a forbearance, it's a little more legal and there's a lot more that goes to it, but I think that, that we just did not require those payments for those 90 days for the SBA. And then on a case-by-case basis, as clients requested, we would work with them. And, we assisted some, but I would say that it was not a significant number that were asking for those payment waivers. And so all right, they're coming, obviously that's getting past that 90 days, but since then, a lot of them have gotten PPP money, a lot of them got their businesses returning. So, they're really in a pretty good cash position. There are exceptions, but most got in a pretty good cash position with all the support that was available.
And I think that's one of the big question marks that I think everybody has is, now that the 90 days is passed, what does it look like? And I think that's been also another consensus from our discussions is that it seems like everybody's kind of just picking back up. And so that makes sense tying that to the PPP loan. Now you mentioned those exceptions. What is the bank doing to work with those exceptions and those customers that maybe need a little bit more time or having trouble?
So we've got we've got some smaller clients, we've got a broad section. So different areas may have different take or different support functions available, but generally we've tried to be stay engaged, understand the client's needs, be specific to what they're looking at and understanding. So it's hard to have a broad brush. Hey, we're going to do this for every client. I think we really try to understand what may make a difference and help. But that for the most part, it's been working. So there's not been tremendous needs or requests for major changes at this point. So for the most part, and but it is a case by case.
Yeah, that's good. So we've talked a little bit about PPP, and so we have lots and lots of videos and a website set up to assisting our clients and others with their PPP loans and determining loan forgiveness, and so it's affectionately dubbed around here PP Palooza. And I know the bank were probably equally or even more consumed with PPP in terms of resources than we were. So I guess just wanted to hear your perspective on PPP, what BBVA did. Kudos to you, because I think you guys were actually one of the very first ones to fund way back in April when the program opened up that we heard about. So great job on that. But just kind of wanted to hear your perspective of the PPP loans.
Right. It was so pretty interesting for us. Obviously, our commercial team and so our sport areas really migrated to work from home, and then right away we're in full PPP mode. And so, that's I'm glad that we were prepared because we had to jump in the deep end of the pool right away, and if we had some issues, we had to get them fixed in a hurry because there was a lot going on. So, but it gave our team a real sense of purpose. Hey, we're going from home, but now we're on a mission, and everybody understood that and was really focused. And I appreciate what James Moore did, other CPAs really providing a lot of information because there was way more questions than there were answers because they kept evolving, and it's still evolving right now.
There's still questions.
There's still questions. So, but I just appreciate our team here in Gainesville with Dwayne Bush, Steve Bakula, Darlene Morgan, and our whole retail team was involved. And our team in Ocala, Roy Hilgenfeld, Tom Bailey, and Steve Bethea, all those folks got fully involved in that, and they worked nights, weekends. But more broadly than that, everybody in the bank got real focused.
Mm-hmm.
And so if you were in an area of the bank that really you weren't involved in the loan side, you got deputized, and now you're part of this process. You got to help with this. So I've been banking 28 years. To have the entire team, and we're talking 10,000 people, kind of focused in one direction, and in support of that effort, it was phenomenal. So we were real happy. We did fund our first loan 3 days after the PPP rolled out. We did brought our countrywide $3.3 billion got announced what we funded. We processed 22,000 applications. The average loan we closed was about $149,000.
Yeah.
And so it helped a lot of people, not just big companies, smaller companies, and it was fun and rewarding. It was hard work, but it was fun and rewarding. And so we're going to look back on that pretty fondly. But everybody understood this is a lifeline companies needed, and we need to do our best to make that. They're already people were already stressed out. When their companies having challenges, we try to make that as good as we could. Make that as easy as possible for people. And I think the team, we're one of the larger lenders in this market, and we're really, really proud of that effort. But it was fun, rewarding, but we knew it was how important it was to take care of the clients.
Yeah, that's great.
We had some other clients that came to us too. So
yeah. Are you guys still taking new loan applications? So when the program was originally instated, it had a sunset of June 30th, but then the Congress extended it to August 8th. So is the program still open at BBVA?
So now we're not open, and I think that we kind of got our process down and the process and really got through most everybody that wanted one, right, through the process. And so it changed. So we did not open that back up. But so at the present we're not open. But I felt like we did a great job meeting the needs of our prospects and clients when we were. So
that makes sense. And so now that the kind of the rush on the application and the funding is over, I think everybody is now looking at, well, okay, great, I got this loan. Now
right.
what do I do? So, and the loan forgiveness is evolving, I think, as we found. We've spent a lot of time and effort delving into it, only for SBA to say, hey, or Congress to say, hey, we'll extend the period from 8 weeks to 24 weeks. And then the SBA say, hey, here's an easy form instead of the regular form. And now there's even proposals that maybe they'll just forgive under a set amount entirely. So what is BBVA doing to help its customers kind of understand the loan terms, the forgiveness, the calculations, and how they should move forward?
Sure. So, John, I was hoping you'd tell me the answers to all these questions today. So it is evolving. We had some plans to do some more webinars, but we are pausing on those. We want to provide accurate, up-to-date information, and we need to wait a little bit because the final rules are still kind of rolling out. I've talked to we got a number of clients that are ready. They want to move forward and go ahead and get provide their documents and go ahead and get forgiveness, but I don't think that's set up at any bank yet to really start that process because, we've all got to get the directions first. But typically, it seems like over time, things have gotten a little easier. Things have been made clear, things have been simplified. So, while it's taking a little longer than probably people wanted, there's probably value in it waiting and getting worked out. And so, the process gets better. So that's what we've kind of shared with clients. But when that does happen, we're going to provide some resources and training and hopefully it's as simple as possible. That's what we're looking for.
And that's been a similar message I think we've been giving our clients is, they extended the period 24 weeks, which everybody's still under that 24-week period. And then even then, the application deadline after that period is up is a pretty long time. So, there's no rush to get this in before, the end of the month or the end of the week or or anything else. And it's probably worth taking time to make sure that the information is right, and then you really can maximize the forgiveness and take advantage of that. So that's good to hear that you guys are kind of on the same page.
We've got a lot of folks working on it. We're just, and when it's time, we'll roll out some more resources on that.
Well, that's great. We're just about out of time, so I wanted to say thank you so much for coming and joining us. It's been super helpful and insightful. So thank you, and I appreciate everything that you guys have done through all of this. Like I said, it was pretty awesome to hear, when our clients started reporting that they were funded, and we were kind of keeping tabs on what banks were with it, and it was pretty exciting to hear BBVA, like I said, was one of the very first ones to fund. So thank you for that.
Well, we appreciate it. I'm glad we're able to help folks, and again, I think we'll look back on 28 years of banking. That was fun and exciting, and bankers were real popular for a few minutes there. So people wanted. So that was kind of cool. We had our moment in the spotlight. So hopefully we reciprocated and make sure everybody was taken care of.
Well, good. We'll tune in next week, and we're going to have more information on real estate. And then, like I said, go to our YouTube channel and check out all of our videos. So thank you, guys.
John, thank you. Take care.